Hello and welcome to Let's Talk About Money. Today I have a great conversation for you. I am speaking to Madison Low, who is a financial advisor who lives and works in Muskoka, Ontario. Welcome, Madison.
Hi.
I'm happy to have you here. Tell us what it is that you do and who do you serve?
Yeah. So, as you said, I'm an advisor in the financial services industry, and I'm also the president of Low Financial Services. So, what I want you to hear there is that we are locally owned and operated. We are a family owned and operated business as well, which is pretty cool. One thing I like to point out is that, listen, I have two young kids of my own. So, I understand that life for a family can feel very overwhelming. So, taking away some of that financial stress is one of the things that I do. This is an industry that is super confusing for a lot of people. So, we want to help you to create a plan, follow through with that plan, hold you accountable, and review it so that you feel financially confident. And I think that that's really, really important. To do that, we have a really strong focus on holistic financial wellness. And I know, a lot of our clients and you, Bree, can attest that we are really big on educating our clients on the products and services and processes that are available to you to make sure that you have a comprehensive plan that supports your financial well-being now and later. So that includes things like budgeting, ensuring that you have a proper will and POA in place, referring you to professionals who can do that, protection planning for the unexpected, setting goals, creating a plan to meet them, you name it.
So Madison is really your financial one-stop shop. And I can attest as somebody who works with Madison and sends my clients to Madison, you do not get in front of between this woman's whiteboard and marker because she will ensure that you understand everything you are opting into, everything you're investing into. And if you have any questions, Madison is happy to answer any of those questions. She's
100%.
phenomenal. Yeah, we love a whiteboard moment. So today, we're actually getting together, Madison, not just to gab, but to talk about protection planning for Canadian families. So, can you tell us what is protection planning?
Yeah, for sure. So, protection planning means understanding what the impact of an unexpected death or illness or disability would have on your family. It is strategically utilizing various financial products like life insurance, critical illness insurance, disability insurance, and group insurance together to create a plan that safeguards your family's well being. So, I think to put that simply or more concisely, is it's mitigating the potential hardships, creating a safety net to do that, knowing that no matter what happens, your family can still live their lives without worrying about major sacrifices to lifestyle now or in the future. So we always tell clients to think about the impact that a major illness or a death would have on your family in the event that you aren't able to work or you're not around. So, we're talking retirement for a spouse, education costs for kids. We're talking about draining savings. So, these things are really scary to think about. And I know this. So, we try and make it light, but it's really, really necessary to talk about those things.
And I speak about insurance all the time with my clients, even though it's kind of a happy, shiny transaction that we're doing. We do have to think about worst case scenario and how we're protecting ourselves. So I think that's it's an important conversation to have, both with your partner, if you are partnered, and with all the financial professionals that you're working with. And this is where
Absolutely.
obviously where Madison comes in. So Madison, can you tell us a little bit about the misconceptions that Canadians may have about life insurance and how they can maybe choose the right type of coverage for their family?
I mean, how long do I have here?
Right?
There's a lot of them. I think what I'll do is I'll just stick with 5 of them to keep it simple.
A whole
Um,
handful.
a whole handful, exactly. And then, if there's any other questions later, people can reach out. But these are the ones that I always mention during our second meeting, which is usually our protection planning meeting during client onboards. So, the first thing I would say is that life insurance and critical illness insurance are too expensive. That's like a huge thing that I hear. But what I want to say is that the cost of insurance is determined by a multitude of factors, including age, health, lifestyle, coverage amount, and the actual products themselves that you might need. So if you work with a professional who is licensed and who has the education, then they'll know all of those options available, how those factors will increase the cost so that you're prepared, and they'll give you choices on what will work best for your family. And probably most importantly, they're going to stick with a reasonable budget based on your income and other expenses that you have in your life. I hope that makes sense.
Yeah, and I'm
But
actually gonna jump in here because that point is particularly pertinent to folks who are purchasing homes, because it's
yeah,
actually best to get your insurance before you buy your home so that you can then, when you're budgeting, when you're making a pre-purchase budget, you can say, "Oh, well, I'm actually paying X amount into insurance every month, so I would not want my, mortgage payment to be however high because I want to account for that cost." So keep going. I just
absolutely.
want to bring some light to
Absolutely.
that.
No, I think you're right. That's something we've talked about that before. It's super important to plan in advance. And insurance is one of those things that you need when you purchase a home. So you might as well just get it out of the way, make sure that you're not waiting or not covered when that mortgage comes into effect. The second major misconception is that group coverage is enough.
Oof.
So many times, so many times people come in and they say, "Well, I have group coverage, so I don't need any insurance." And don't get me wrong, insurance is a dirty word. People don't like it. So that's why we use the word protection planning instead. But what I like to point out is that group coverage, like specifically life insurance, critical illness insurance with your employer, yeah, it might be enough. It might, but that is very often not the case. Furthermore, it's usually very limited. So, what I like to tell clients to do is consider whether the coverage is enough to pay your mortgage, replace your income for your family, cover the other costs that are associated with a death or a major illness. But I think furthermore, the primary concern and the primary problem with group coverage is more about the fact that it doesn't actually belong to you. So the company owns it and they can choose to change that coverage or even cancel it at any time. So if you own your own coverage, you get to choose the type of coverage, the terms of the policy, and the amount. So it creates stability and control over your own plan, which is something that's really important. A lot of people have this idea that there's just one type of life insurance. Oh, I have it through group. One type of critical illness insurance. Well, I have $20,000 and that's enough. I think it's important to note that that's just not true. There are a multitude of products available. And so group is great, but we like to consider it more supplementary.
Hmm.
Does that make
Yeah,
sense?
no, that makes so
I
much
think
sense because I hear that too on my end. Oh no, well, I have insurance through work. And then
yeah.
I always try to connect my clients with an independent professional who can just take stock of what they have and how it's working for them and how it will work for them in the event of an emergency or a tragedy.
Yeah.
And I guess I'll ask you here, Madison, if I'm sending you a client and they book an initial meeting with you, does it cost them? Do they have to pay per meeting?
No, no, we don't charge up front at all. There's no out of pocket cost. So just like a mortgage broker, we are a commission based. But what's really interesting about the way that our business is operated is that, we don't get paid unless you make a decision. When it comes to insurance specifically, we are paid based on the decisions that you make. So Absolutely. I'm always giving Bree, you've seen my chart. I give people option one, option two, option three, and they're all plans that will suit the client's needs, but they all have different price points. And if you choose a package or a plan that costs more money, then I'm paid more. But you are in the driver's seat. You are making the decisions. I'm here to guide you. And I think
Mhm.
that's something really important to note about specifically the protection planning end of things.
Yeah, thank you. Thank you for those details. I'll let you continue about the misconceptions, but I do
Okay.
think that that's so important for people to know because we as professionals exist to help them, and it's not always at a cost to the consumer. So go on. What
Exactly.
else? What else do people need to know? What do they get wrong about insurance?
For sure. So the third thing is that you don't need life insurance just to cover funeral costs. People come in and they're like, "Oh, well, I have this, policy from my parents and it was, $10,000 and that's enough to just, to cover my funeral and take care of my body." And that is just simply not the case. First of all, what your parents bought you is often fantastic and it is great to have a permanent policy. There's no question. But I think that the you need to consider that the death benefit from your insurance policy should actually be used to help pay for more than just those, end of life costs. So it can be used to pay for your family's other expenses like your mortgage, personal loans, tuition fees, donations. We're talking about income replacement is a really big, important one, making sure that your retirement is still going to be able to be funded adequately. I could name so many other things, but those are the big primary things. So, what I tell people is to ask yourself, what are my current expenses for my family? How will those change in the event that a tragedy occurs or somebody becomes severely ill? And would my family be able to cover those expenses in any of those events? And often the answer is no, right? Because we know that we need help. So, with the right insurance, you can leave them enough money to cover any expenses, repay any outstanding debts, and it provides such peace of mind. I find to clients, they can take kind of a sigh of relief when they realize that if something happens, their family is protected. Their family is going to be paid out tax free. So it's super efficient and it's just a really great way to make sure that everybody's taken care of.
And I think also that I'll highlight that tax free um, it's essentially tax-free income should you pass, and that's important because families don't want to be dealing uh, with taxes on this sum of money that they're receiving to make their life easier. So I think that's an important point there.
Absolutely. And I think it's also important to note it doesn't matter whether it is, term life or if it is permanent life or if it's term critical illness that you own personally, all of those pay out tax free, which is a really big deal. It means that, you're keeping every dollar. Um, I would say that the fourth major misconception is that, and you've touched on this already, so I won't labor this point, but is that mortgage protection insurance and life insurance are the same thing. So often I will have people come in who already have a mortgage in place, and there is what they believe to be life insurance attached to it or critical illness attached to it. But life insurance and mortgage protection are not the same. Mortgage protection, whether it be life or critical illness, is loan protection. That means that it covers the existing mortgage amount in the event that you pass away. So that means it pays the bank, not your beneficiaries. So if your mortgage is paid off, don't get me wrong, that's great. But what about income replacement? What about the retirement and other goals that I've already mentioned that your family might have? So without you around, just having the mortgage paid off is probably not enough. It's probably not going to meet all of your family's needs. So you'd also likely be surprised, and again, you've probably seen this, that the cost of mortgage loan protection for illness and life is comparable to purchasing your own policies. And sometimes it's actually less out of pocket every month for you, and the value to you is often substantially higher, again, because you have control over those policies. You own them, they're not tied to the mortgage or other debts at all.
Also with mortgage protection, and let me preface here that if you don't have anything, you do need mortgage protection.
Yeah.
And there are situations where sometimes people opt into the mortgage protection and then find a more suitable product for themselves, and then they can let go of that mortgage protection. That's also something that happens quite typically, but
Especially, yeah, and especially if they, sorry to interrupt you,
that's okay.
especially if they are somebody that, like you and I said, you should get that personally owned plan in place prior to closing or prior to getting that mortgage organized. But often it's just not the case.
Mhm.
So having that mortgage protection attached in the interim is great.
But also from a cost perspective, you want to ensure that you understand that for mortgage protection, you're going to be paying the same amount monthly. And then the amount of money that you will receive, should you need it, is
Yeah.
declining because it's
Yeah.
actually just protecting that mortgage principal that you have. So,
Exactly.
just dollars and cents wise, it's great to have protection. You need it. Hear this from me as a mortgage professional. You
Yeah.
need it. And a life insurance policy would likely be more appropriate, especially down the road as you're shrinking that mortgage principal and you're still paying that same amount monthly. It just doesn't make sense, right?
Yeah. Like you're paying whatever, let's say it's the $100 a month to cover that mortgage. Mortgage started at 500,000. It's now at, 400,000. You're still paying the
You're
same amount
still
that you
paying
were.
$200 a month whether you receive 400K or 500K, and that just doesn't seem like
Exactly.
a wise consumer, move to
Yeah.
me when you could have access to something else that is much more
Yeah.
appropriate. Alas, I
Yeah.
digress.
Yeah.
What else do we need to know about insurance? What's the last
I
thing
think
that people
this
get
is it.
wrong?
Yeah. This is the last one. So, critical illness and disability insurance are not the same thing.
Mm.
So we hear all the time that critical illness and disability insurance, they cover the same things, and they don't. That's just not the case. They each cover different ailments and they each pay out differently. So for example, the most basic is that critical illness policies pay out based on the illness diagnosed and defined in the contract, whereas disability insurance covers the insured based on their ability to do their job, whether that's
Mm.
due to an illness or an injury. So they're for different purposes. Now, sometimes that means somebody needs both. Sometimes they need a little bit of one and a lot of another. Sometimes they don't need both. Sometimes they just need one or the other. And I think that that's part of the advisor's job, is to determine what suits them best based on what their feelings are around the products themselves, because it is a product. We're all going to have a feeling around one or the other. And we're also going to have preconceived ideas of what they are that impact our feelings around them. So I think it's important to note that they're not the same. They cover different things and both should be considered.
I agree. Um,
Yeah.
so we've talked a little bit about product,
Mhm.
and now let's switch gears a little bit. Let's talk about the ever important emergency fund.
Yeah.
And we've called that different things on this podcast.
Yeah.
Sometimes we call it an FU fund, sometimes we call it something else.
Yeah.
But so why is this important and how does it work in conjunction with protection planning? And how much should families aim to save for an emergency fund?
Yeah, that's a great question. So this is interesting because don't get me wrong, it does play a part in protection planning. But when we're talking about protection planning, we are generally talking specifically about insurance products. Just an easy way to separate protection planning from investment
Mm.
decisions. Because I think that if we consider our savings as part of our protection plan in the event that, something major happens, illness or death, for example, we're then assuming that we're actually going to pull that money, which is not what we want. We want our investments to stay intact in the event that one of those things occurs. So I
Mm.
just like to separate them. Now, to kind of touch on the other question, is when we look at somebody's overall wellness in finance, we want to recommend that you have 3 to 6 months of monthly expenses set aside. This money should be accessible, absolutely, but it can be still in a savings account, like a tax-free savings account. It just doesn't just have to sit at the bank. Actually, a lot of people prefer that instead of having it at their bank, they have it with us so that they don't see it. They're not paying attention to it. It's just growing, it's doing what it needs to do. They're not tempted to take from it. But I think that you should understand what options you have for those emergency funds. But I want to be clear, having something somewhere is better than nothing. Um,
Mhm.
that said, some families may choose to consider a line of credit for the purpose of those really short term emergencies. For example, your furnace breaks. Some people will use their home equity line of credit. I'm sure you've heard that as well, to pay for that if they don't have those 3 to 6 months of savings set aside. And that's not wrong. It is an option. And that's part of our job, is to determine, whether you should do those 3 or 6 or somewhere in between or more, and how your accessible, line of credit may impact your decision around that.
I think that's a great detail to add because it's 2025. Like cash flow is down for Canadian
Yep.
families. We need options. We need different ways to structure our finances to make sure that as a family we are holistically well. So if you have questions about a savings account, a TFSA, where should your savings be, then you can book Madison, you can talk to her about these things because
Yeah.
she is
Thanks for the plug.
she's
Love that.
no, really, really though, because unless you work in the financial industry, and I can say this as somebody who was not in the financial industry 5 years ago, you don't know what you don't know, and, if you have
100%.
your money 3 months, 3 to 6 months of your expenses sitting in your checking account, then I'm going to tell you, book an appointment with a financial advisor because you need to know what your options are and your money could be working harder for you. And we all love that. We all love when something gets taken off of our plate and we can have more money in our pocket. So that's definitely something that you want to explore if your emergency fund is in your checking account right now.
Yeah. And it's less
So,
like it's accessible for sure if it's held elsewhere. You still can get it in a day, but you're not seeing it sitting there. You're more
mhm.
likely to spend it if it's just sitting there. That's human
And
nature.
it's the mental game that is really the biggest barrier when you're talking about saving money or not touching it on a rainy
Yeah,
day.
exactly.
So there are a lot of factors that affect our financial health. How does having a family or life changes like buying a house, leaving my job, having another child, how will that change my need for insurance? And can I change it in the midst of my
Yeah.
policy?
Great. That's a great question. Ironically, that's usually when people call me because it's like big things are happening. I know I'm not organized and I know I need to get organized. That's often a trigger for people to review their protection plan. But I think another reason people get in touch is if a friend or a family member, if something
Mm,
happens to them, because they see firsthand how it can impact their life.
Reality
So I think
becomes a
that
bit more real at that point,
yeah,
right?
yeah,
Yeah.
absolutely. And I think to answer, sorry, I kind of went off track, but I think that's an important thing to mention. But if you have one of those major life events, like you get married, you have children, you're buying a house, you're heading into retirement, you want to take a year off work, have all of these things that will have a major impact on the coverage that you need and what types of coverage you need, because these big events will absolutely have an impact on your lifestyle and probably your personal financial goals. So your protection plan needs to change with that, not just your investment plan. And I think that it kind of often gets pushed aside for a while, but then because it's big and scary, but it's not that big and scary, I promise. But yeah, and then to answer your question about can we change it, that is 100% we can adjust. That's how we structure them. Your protection plan should be created in a way that it can be molded to suit your life as you age or as these major changes occur. Um, so, yes, there's absolutely changes that you can make as your life changes, and it's completely um, something that's available and that everybody should talk about.
So it's something that's fluid that we can work on. That's not we're not locked into forever. That's great news.
No.
We're coming to the end of the interview, but I do want to ask you, what are some of the most common financial risks that families overlook? So other than just having a lack of insurance or a lack of protection, what do you wish that you could have Canadian families hear from you?
I think that a lot of people overlook the opportunities that are available to them that align with their goals and that make sure if something major happens, they are protected.
Mm.
And that is that that's not just protection planning. I want to be really clear about that. This is a major component, but like I said at the beginning, it's a pyramid, right? So you need to make sure that you have a solid base. You need to make sure you have a will and a power of attorney, work with a lawyer to get that done. You need to make sure that for your mortgage, you have the best product to suit your needs and somebody who's on your side. You want to make sure that you have an advisor who is looking after your best interest, who is licensed and has the education to support you. And in doing that, you're going to have that budget, that protection plan, that investment program in place so that families do have something to kind of fall back on. Um, and these people are here to support you, right? Um, and because it is a big, confusing industry, why do it alone when you can get help? And I think that that's the biggest risk that Canadians take, is saying, well, I can just do it myself. Um, and the example that I always use is, you hire an electrician to wire your house because, we don't want our house to catch on fire. We hire a plumber to plumb the basement because we don't want our house to flood, right? We make sure that we hire a lawyer because they're going to make sure that in the event that something major happens, like if you die, your will is valid and your goals are met after you're not here. It's no different when it comes to your money. And you need to make sure that your money is working for you. And that includes all of the parts of a plan that supports your financial wellness. Um, yeah, so, you don't have to do it alone. It doesn't have to be scary. Lean on the people around you who can support you.
Yeah, lean on the professionals. That's what we're here for.